From the floor of the CME Group in beautiful Chicago, Illinois, the trading capital of this planet, I am Mark Sebastian, Chief Operating Officer of OptionPit.com, and this is your Mr. Top Step update. Well, not shockingly, we're running into some resistance at the 1400 level in the S&Ps. I would be shocked if we blew through that. However, today should be considered a positive day if you're bullish. We had a massive update on Friday, and the fact that we get a huge move like that wipes out the losses an entire week, and then we're able to follow through with a 7-point rally threatening that 1400 level, that should be considered a good sign. Looking at the VIX, you can see that the VIX, while technically up today, is actually indicating that implied volatility is down. Coming out on a Monday, the VIX should be up between 0.8 and 1%. Based on just kind of the way the VIX model works. The fact that it's only up about 0.5 point shows you that there's continued selling pressure. VIX futures are also down. So what does that mean for you, the trader? Well, a couple of things. The VIX is pointing toward a slow week. Plays that make some sense. I think a short iron butterfly in the S&Ps could make a lot of sense. I also think that the VIX is now getting cheap enough that back spreads and ratio back spreads can make a lot of sense. One interesting thing for premium sellers is putting on some cheap out-of-the-money ratio back spreads. They can be a very efficient way to get long premium in the case that we get some sort of major pop. If you watch other kind of indicators, VVIX, the volatility of VIX, is very cheap, which means VIX options are cheap. If VIX options are cheap, that means S&P put options are cheap. So those of you that are trading out there that are short a lot of premium, now is the time to be buying some cheap puts. Now, looking at individual equities, Apple, Google, even Goldman Sachs, their individual equity vols are near all-time lows. I think now is the time to be buying, if you're bullish, to be buying premium, putting on calendar spreads, bullish calendar spreads or bearish calendar spreads. One play I like is kind of the August weekly versus the September. Lets you get long a lot of Vega and get short a little premium. Other plays that can make some sense, Google straddles are going to be hard to lose right now. So there's a lot of opportunity out there. Now, for futures traders, don't expect a lot of price volatility. The market isn't pricing it. Could be a slow week. When vol is low like this, our condor strategy or strangle strategy can work. You just better make sure that you own puts or put back spreads to protect yourself in case we really do sell off. You never know when a shoe's going to drop. So, from the floor of the CME Group in Chicago, Illinois, I'm Mark Sebastian, Chief Operating Officer of OptionPit.com. This is your Mr. Top Step update.